All right, so if you're a beginner trader or someone that's actually struggling with understanding market structure, maybe having a hard time depicting the direction of the market, should I be trading short? Should I be trading long? Please, I would highly recommend watching this video from beginning to end in its entirety because it may unlock something for you. It may provide some additional information, some insight that's going to help you hopefully in your own trading. I've done videos in the past where I talked about the market making higher highs and higher lows, okay, or making lower lows and lower highs. I mean, that's pretty much how the market moves, unless it's moving kind of sideways, stagnant like it was in this area this morning. So I'm going to show you just based on diagram, what to kind of look for, and then we'll take a look here at the actual market itself. But I like to scalp the E-mini futures, and maybe you trade or like scalping the micros. Either way, first and foremost, you have to understand what is the market trying to do, okay? I'm going to show you how to, first of all, identify the direction, but also, properly mark up the chart so you can take quality scalps, okay? Now, I talk about the strategy in which I use here on this channel using multi-chart confluence. I'm always marking up to start with my higher base chart. That's my 120 range. I trade range-based charts. I don't trade tick volume or whatever else you trade, okay? Or time-based charts, is what I'm trying to say. There's really no comparison because each chart moves differently. They're calculated differently. Like time-based is based on time. Range moves based on, the amount of volume or the influx of volume that comes into the market. Two chart styles that I'll say probably you will find some similarity to is going to be tick and range, okay? But I primarily trade range. That's all I trade, okay? I started off doing this, and this is the way I've been doing it since because it's just cleaner to the eye to me. So many people ask me, why do you trade range charts over time-based charts? Because I've started using them, and at my very own inception of starting to trade, and just I looked at time-based, I looked at volume, and I looked at other things, tick, but I just like the way that the range charts move, and I see that when an influx amount of volume comes in, the market moves with aggressive based on movement on candles, whether to the downside to the upside fairly quick. Now let's take a look here because I'm going to kind of go over real quickly structure of the market, what it kind of looks like on a diagram, and then we'll look at the chart. But before I do so, to all those who are the elite channel supporters, the trade that I posted over on the Discord today, yes, it was a beautiful trade that I picked up 40 points on the NASDAQ. I waited for, that magical thing to happen that I'll talk about as part of the strategy. But I'm going to break that trade down for all you elite channel supporters. If you are interested, and that will be today, I'll post that video. If you are interested in becoming an elite channel supporter where you gain access to the trade breakdowns, that's everything, okay? I mean, that is the full-on, that's the meat and potatoes to the strategy, breaking things down so you understand these setups that I take. It surrounds, marking up a higher base chart, and then we're waiting for something to happen on a lower base chart. Sometimes we don't always get that zone within the zone multi-chart confluence setup. So, I talked about in videos prior to, typically speaking, in many videos, to where if it taps a higher base zone, then, I'm looking for, something to happen. I'm looking for structure to be broken back to the downside on a lower base chart. So I'm going to break that trade down. But you have to understand what was going on structurally to understand why I took this trade. So if you're interested in becoming an elite channel supporter, the link is down in the description portion of the video. There are tons of trade breakdown videos where I break down trade after trade after trade that probably will help you in your own personal trading. I go through, where to place your stop loss at, where to place your profit targets at, what I was thinking, and why I took those trades. There's tons of those videos. You also get the video playlist and a great video that I covered surrounding market structure for anyone that's, kind of struggling with that concept. Again, the link to become an elite channel supporter is down in the description portion of the video. It is right below the Discord link. The Discord is free. The second link is the elite channel supporter. It's only $6.99. But again, that's up to you to choose if you want to join to become an elite channel supporter. You basically support my efforts as a content creator and as a trader, but that's what I'm giving back as a means of perks and rewards through the YouTube tier membership program. It allows content creators like myself to create valuable content that will, hopefully help other individuals out. And that's what I'm trying to do, is spread what I know, share what I know, surrounding how I actually trade, and maybe inspire other individuals. You don't have to, like I said, maybe give it a month's try. If it don't work out for you, I mean, you only, $7. We're not talking about hundreds or thousands of dollars spent into something, but you'll hopefully be able to, educate yourself as I walk you through these setups and spend some time watching the videos as well on the public side of the channel to where you can educate yourself about the strategy as a whole. Now, when it comes to trading, there's a very elementary way of understanding, where to really look for opportunities for setups. If the market is bullish, first and foremost, making higher highs and higher lows, and you see it making, basically a pattern like this: highs, higher low, highs, higher low, highs, higher low, and then highs again. All it's doing is each time it makes a new high, makes a new higher low, and breaks above this area, it's breaking structure. A new high, pulling back, breaking above, breaking structure. Same thing as it moves to the upside. So that's a bullish run to the upside. And this is where we should be looking for what? Opportunities to pull back to key areas of demand. So if the market breaks structure here, pulls back, breaks again, pulls back, demand can be found in these areas here on the pullback within a swing. We're looking for the market to pull back to the inside of a swing where a demand zone rests at. And the same thing here. If it pulls back right here, we'll look for a zone somewhere in here for the market to tap into a demand area. Now, what you'll find as far as, because a lot of people always ask, well, how do you know if the market is going to shift and start to go from a bullish to a bearish standpoint? Well, all we're doing at that point is looking to see, all right, if it starts to show its hand on the last high that it made a low. Now we got a low, pulls back, doesn't take out the most recent high it made. This would be a major high pretty much. But then it makes a lower high and then comes down and takes out this low. That's your first break of structure to the downside. So at that point, would I be interested in looking for an opportunity to go short? No, I need to see some more confirmation that the market is going to fall through and push lower. But it did take out its first area of structure. If it takes out this area over here, as you can see here, we'll bring this down a little bit to see where, okay, now it's broke a low, okay, after making a low, higher low, excuse me, a low, yes, a lower high, and then making a new low, taking structure here out, and then it takes this area here out. This is basically what a lot of traders will consider as like a head and shoulder pattern. And you'll see that inverse from if the market is bearish and then it starts to move back around to the upside. So after it makes that kind of pattern to the downside, to me, that would be a full-on trend reversal to the downside. So where I was once looking for a bullish movement to look for opportunities to pull back to key areas of demand, once it does this and break structure, I'm looking for supply setup. Market pulls back, pulls back to an area of supply. I'm going to go short with the market. That's what we're looking for. So it's the same thing if the market was, moving from the downside back to the upside. So, if the market was moving lower, lower lows, lower highs, lower lows, lower highs, and breaking structure lower to the downside, each time these areas within the swing could be your areas of supply to look for pullbacks to go short. Now, if we get that move back to the upside where it makes a high, higher low, doesn't take out the most recent low, and then break structure, meaning first area structure here, second area structure, this would be your reversal right here. All right, this is an inverted left shoulder head and inverted right shoulder pattern for a trend or a reversal back to the upside. Then you'll look for a pullback to a key area of demand to go short. Key area demand to go long. Just like over here, bullish, bearish, trend reversal, pullback, supply, go short. Okay, we're doing the same thing in reversal over here. So that's what I'm going to show you right now, right here, down here on the chart. Okay, so this is my 120 range chart. This is the chart I mark my zones up first. I'm always marking a higher base chart first, whether it's going to be a demand zone or a supply zone. Again, this is a simple way to go about being able to first identify the structure of the market. And you can do this, as long as you have, I try using InterTrader 8, okay? So, and I'm using a desktop PC or a desktop computer. You can do it from a laptop, but I like to be plugged in directly to, I don't use Wi-Fi, to be honest with you, because, you might get the interruption of connection. I like to be plugged directly into my actual router, which is then plugged into my, plugged into my modem, which is then plugged into my router. I like to be plugged directly in case of. And I also have a backup battery or piece of equipment that I have tied to in case you say, for example, the power shuts down, the internet's still on, I still have enough time to, get out of a trade if I need to because I have backup power going on. Anyways, but what I'm trying to say is that the market, as you can see here, is making, take a look here, I'm going to show you. We got higher highs and higher lows to the upside. We had this nice pullback to the downside right here, and then it breaks structure above. This is a major structure break here. This is a major structure break, or major low and major high to where the market can break structure to. As you can see where it makes its pullback to the downside right here, it came back up and broke structure above. Major high just got taken out, so we're still bullish to the upside. As long as we're breaking through and taking out major highs back to the upside on swings, then we are still bullish. And you can look for opportunities to do what? Go long. Like right here, break a structure to the upside, pull back. This is going to be a nice area of demand. It could have came down here as well, but again, we never know what the market is actually going to do, react or reject it. We have to trade based on probability. Once the market taps into a high probability zone, both of these are high probability zones in which the market could tap into. Now, with that being said, let me give you one of the biggest pieces of advice that I can say this right here. If you're struggling and you struggling trading in between swings, you know, like right here, the market had a nice pullback. These would be minor areas of structure to the downside. Turns back around, start taking these structure areas back out to the upside, and then it kind of halts in this area without breaking that major high right there. A lot of people get tripped up there. They get confused there. So then wait for the market to really show its hand and wait for it to break a key area or major area of structure, either a major high or a major low, and then look for your pullback. Like right here, this was a beautiful pullback. Even though you would have probably had to wait a day for it to actually happen, but the next day, this was the 16th, this was the 17th, it finally broke that major high there. If you can wait, okay, I'm telling you right now, these are beautiful areas to look for opportunities after the market breaks a major high or major low. Now, this is a demand zone right here with it's a high probability zone. I talked about what marks a high probability versus low probability. Low probability, no imbalance or gap resting at the zone. As you can see on this candle here, this bullish candle that took out basically a little swing to the upside, or a little, not say swing because it's not, a little zipper to the upside, push up, pull back, broke higher. This is a demand zone because it's aggressive buying to the upside. So the market can stop at this area here, but there's a gap, okay, right here. There's a gap on this second candle that broke above right here, as you can see on this candle right here. So it's an imbalance resting back at the zone. As you can see, the market reacts at it and then breaks structure again back to the upside. Again, what do you have here? Let's move the chart down. Breaks a major area of structure right here up to the upside on the move up to the upside right here. Comes back. This is a high probability. There's a small gap on this candle here back at this demand zone. So again, waiting for the major areas of structure to be broken to the upside or downside are definitely good quality zones to look for. Okay, because you got major area structure versus minor area structure being broken. Again, major structure break here to the upside, pulls back, key area of demand, take a shot going long. But then we get somewhat of a reversal back to the downside. As you can see here, the market does what? Makes lows, lower highs, and then it starts taking out structure over here to the downside. So this is where you can look for a pullback to actually go short, because now you have that full-on trend reversal where we had a left shoulder here, head, and right shoulder. That reversal pattern, breaking structure to the downside. Look for a pullback to a key area of what? Supply to go short off of, okay? So what I'm trying to tell you is that wait for the bigger moves to take place. Now that we made this high right here after breaking this key area structure, if the market breaks above, you got a major area of structure being broken back to the upside. Again, like right here, it broke this major area structure. This was on the 17th. This was actually yesterday, the 20th, when it came back. After it actually broke this major high right here on yesterday's trading session. I didn't trade yesterday, but it actually broke it. For anyone that did trade yesterday, you could have waited for this pullback here. No, not yesterday. I'm sorry, guys. Not yesterday. This was on the... Yes, it was yesterday trading session, which it closed at 1 Eastern and then 12 Central. This right here was an area to take a trade from going long. Major structure break, come back, taps it. And then this is where you can move down to a lower base chart. The strategy, which I talk about, over on the trade breakdowns for anyone who's an Elite Channel supporter, anyone that's interested, you know how to join now. The link is down below. This is where I talk about the strategy. First and foremost, marking up your higher base zone and then moving down. So when we get that break of structure to the upside and it pulls back to this key area of demand, I then move down to my 24 range chart, okay? And then I'm looking to see, is there a 24 range zone, meaning a demand zone, resting on the inside of the 120 range zone. So basically, this box here is off of a higher base chart. Then I will move down and scale down to my lower base 24 range chart to see if there's a 24 range zone on the inside of this larger zone. That's all it is. That's the multi-chart confluence strategy that I talk about, using the 120 range and the 24 range. If you want more in-depth information surrounding that, you may want to join to become an elite channel supporter, where I walk through the setup surrounding the multi-chart strategy and breaking trades down so you grasp and understanding more so with full-on insight, okay? But again, we made a new high here. So, all right, now we're in today's trading session. It makes this low right here. This is the low right here. Now, we're in between. We are in a wedge right now, all right? So if the market is moving sideways right here, you're saying, okay, well, I see where we got these minor structure breaks to the downside, and now it's coming back up, creating these minor structure breaks to the upside, but it hasn't taken out this major high, nor this major low. There's only two ways it can go. Either break the structure to the upside or break the structure to the downside. If you're patient enough and you're waiting for a good quality setup, then off of a higher base chart, then wait for structure to be broken to the upside or wait for it to be broken to the downside. If it breaks it to the upside, look for your demand setup. If it breaks it to the downside, then again, I hope I said that right. If it breaks it to the upside, breaking this high right here, then look for your demand setup to go long. If it breaks it to the downside, look for the pullback to a key area of supply to go what? To go short. The same thing that I showed you just above here, as it does right here. Breaking structure up, pull back, go long as it's breaking structure to the upside. Here, same thing, breaking structure to the downside, then look for the pullback to go short. Once if it's taking out, major areas of structure lower, meaning major lows, okay? It's simple as that, guys. It's not a lot of, you don't have to put too much or overdo the complexity of thought into, understanding this. It's like, yes, it can be a little bit confusing when the market is kind of moving in between, you got a leg high and a low here, and then it starts pulling back, trying to figure out which way you should trade. But look, if you can wait and patiently for the bigger structure breaks to be broken through on a higher base chart, then look for a pullback to a key area on the higher base chart. The same thing we do all the time. We got a major structure break here. Boom, pulls back. A high probability demand zone off of the 120. I already said this. Broke the area structure on the higher base chart. Pulls back. Scale down to the lower base chart. Look for the 24 range. Demand zone. Rested on the inside of the zone. Go long. Okay? Just this little movement, even though it doesn't look like much here on the 120, look, this rejected at 21,644 and 643. It goes all the way up to 21,727. Just getting 20, 25 points of that is a very good trade, whether you're trading the micros or, the full-on major E-minis, all right? And again, you can do this from a laptop, a desktop. Again, I recommend being directly plugged in if you can. But this is what I do each and every day in scalping. Specifically, I like to scalp the indices or the equities with like the ES futures, the NASDAQ futures. But maybe you trade the Dow, maybe you trade the Russell. But you can also trade there's other markets you can trade when it comes to the future markets. You got commodities, you got the bond market, the financials. You got currency markets. So whatever it is you may want or take interest in trading, this is what I do. Today I took a beautiful setup going short off of this pullback right here. It came up to this 640, basically 650 area. I talk about the 50 area, half numbers and round numbers. Those are good areas or numbers to use, price levels to use for confluence as well. But this was also a what? This was also a major, or I should say, this was a pretty significant supply area right here. We got aggressive selling to the downside, pullback, breaking structure below these areas here. There's a gap on this candle here and imbalance resting back at the zone. Okay, that's confluence there. Got confluence as well. Looking at the volume profile. But again, there was confluence with the 650 number too as well. But there was something else that I was looking at just as well that helped me get into that trade, and I'll break that down for all the elite channel supporters. So again, if you're not an elite channel supporter and you want to become one, you can join by clicking on the link down in the description portion of the video. I'll go ahead and show the clip right quick on the trade that I took. It was a 40-point move to the downside, as you can see right here. Okay, and it happened fairly quickly. I'm gonna be honest with you. Once it tapped the zone, it came on down fairly quick, and I was just looking for it, for it to come down here and take. This is how I have my profit target at right here. Okay, and it comes on down there. Boom. All right, as you can see, keeps moving. I'm at 37.38, and then it comes down there, it hits my profit target, and then I close out. I'm done for the day. Simply put, that's all I did on that trade there, and I'll break that down again today. But this is a simple way to be able to understand and scalp and be able to make 20 points, 10 points, whatever it is you're looking to make, whether you're trading a smaller size account, which you can grow and compound to a larger size account, whether it's the micros or the full-on E-minis. But I just want to share this with you because it's a very easy strategy. It's a very elementary way of being able to trade if you understand, I keep stressing this, market structure, okay? So that's all I have for you guys today. I really appreciate everyone that tunes in, all my supporters that tune in on the daily, watching the video content. If you're not a current subscriber, please take the time to go ahead and sub by clicking that subscribe button right now. Make sure to turn your post notifications on by clicking the bell, okay? That's going to, make sure you get the videos when I drop them. But if you found value in today's video content with me showing you, walking you through kind of, just a very basic idea of market structure and what to really look for to kind of increase the probability of you getting into higher quality and higher probability setups, please make sure to drop a like, hit that thumbs up right now if you found, quality and value in today's video that I just dropped. I appreciate it, guys. Take care. I'll see you in the next one. Hope everyone has a safe trading day and the rest of the trading week. Take care.